see, California state creates different programs to help the buyers to become a first-time homeowners. And yes, I do have a lot of buyers on my site as well, the ones who can manage to collect some money for down payment, and some people can't. They can't keep up with the prices, and also they have, some of them have a really good salaries, but they can keep up with the prices going up. So that's why I'm trying to find different ways how we can finance and support the buyers, and especially first-time home buyers. So if you do have questions, if you need, have questions about specific markets, like specific cities, just contact me or text me. I would be happy to help you. And also, I'm very active on Facebook. Facebook Messenger is a way to catch me really fast. And actually, I do have a page where you can see all the updates which are happening in the Bay Area. Anything interesting, anything particular news, what's happening right now on the market, and I'm very active agent. So to go a little bit about, I wanted just to tell you really fast in regards of what happens on the market today. I know like everyone knows about, I do have a presentation where I say like what the agents do, why do you need an agent? It's very pretty straightforward, explanatory, right? Like if you have any questions in regards of it, just contact me. But basically, we are my work is to find, not only to find a property for you, but help you for this transaction to go smooth and with no problems, and protect your legal and financial interests in this transaction always, right? And this is priority. And basically, our job is to negotiate. Negotiation skills is the biggest part in being an agent as well. So let's go to the next slide. So really fast, what's happening with the market and what influenced that market that much, right? Like, so people would say like, oh, the market went crazy, insane, right? But when we look at what influenced it, it's stock market, when like it skyrocketed, right? Like for the last 2 years. Then we do have the biggest influence on the market was a low inventory, right? So what happens, we have a big gap between millennials and baby boomers. So millennials, there is like so much millennials on the market who are ready to buy, who are strong buyers, but there is nothing to buy, right? So there is not enough inventory, especially in California. Whatever they build, the new construction is not enough. And also we are in inflation. We're like, inflation is over 7% probably right now. And of course, we had like at the beginning of the year, sorry, my phone is ringing. Yeah, at the beginning of the year, we had seasonal, like people started to get the bonuses and so on. Oh, I don't see my slides. Yeah, so basically that all influenced, and the biggest influencer, right? The biggest influencer on the whole market, it was a low interest rate, which was the lowest, I don't know, from so many years. Basically, I told all my buyers, this is basically a free money from a government. You need to buy right now. Even if you overpay on a property, this is the best time to buy. You just lock your low interest rate and move forward, right? So, and okay, so, and what happened right now, of course, through the first months of the year, people started to get tired, they got overbidded and so on. And then interest rates started to get higher, right? Which is, which stopped a little bit the market. And I see it right now, actually, in many cities. Market, I wouldn't say, like people ask me all the time, is it going to crash? Is it going to crash? No, it's never going to crash. I mean, not never, but it's not going to crash this year and probably next year. Why? There is low inventory. There is nothing to buy. And there is like I constantly have buyers still calling me, even interest rate going up. They call me because, I mean, the rent is going up, right? And a lot of cities, the rent is going up. So it's always at the end, right? It's better to buy your own property to collect equity. So that way you will build your own equity. So in the terms of the market, right, what happens? I see a little slowdown, and it doesn't mean they're gonna, the price is gonna go down. It's just there is a listing price and there is a market price, right, of the property. So if a month ago when the interest rate, or maybe like a month and a half ago when interest rate was really low, right, or maybe mid low, right, so we would see overbids on properties like 500k, 300k, 400k, some properties 100k. Right now this appetite's a little bit short, I mean, like uh, went down, right? So we don't see these big overbids. Still, I see on some properties which are amazing properties and people bid on them, but it's less, right? And for each single family home, out of like, if a month and a half ago it would be like 10 offers submitted, right now there is maybe 2 or 3, and so they still strong offers, they still overbid the listing price, but it would be kind of this kind of market. We're moving a little bit to the buyer's market, and I think if we will have more properties on the market by summer, it would be better for the buyers, and then by autumn it's going to be awesome as well. So yes, we're moving a little bit to the buyers market slowly, but I'm pretty sure we're going to be there soon. So interest rate is, yeah, it's growing, but there is still a lot of financing programs on the market, and I wouldn't say it's like people tend to scare about this interest rate to be 5%. Yes, of course we're spoiled by 2.75 or whatever 3, but it's still not high. Like if you look at the highest interest rate which US had, it was like I think 17 or 18% many years ago. And so I still think 5.25 or whatever interest rate is still not that high. And also, I know that interest rates should be jumping a little bit more, but let's see where it's going to go. And a little bit from what happens in the whole US, right? So just if you notice, if you look at the stock market as well, right? Like stock market is going down a little bit. I don't know how long it's going to be. Hopefully it's not going to fall, because I do have a lot of buyers who have their money or down payment in stocks, majority of it. So yes, it's going to influence the market if it's going to keep falling. And of course, the bidding amount which people will put on properties is going to be affected by that a big time. So a little bit, this infographic just shows you about what happens in the whole US, right? And if you would see like that, they show what is overvalued market and normal and undervalued. And I would say that California is still kind of undervalued, right? So if we compare prices, we still have, well, in each city probably have some room to grow, right? Because we're catching up with inflation. Let's say if you look at the Florida market, right? Florida market growing, I mean, like you would see homes. Oh my God, I saw the homes right now. Somebody, I was actually looking at the market. Somebody bought the house for 750, and like within like half a month or maybe 2 weeks, they put it on the market for 950, right? And people go insane. So there is a high range properties. They sell really fast. But why this is happening? People from Canada, from Sweden, from different countries, and of course from California, they invest and buy properties there, specifically by the ocean and so on. But the thing is, the market in Florida is not supported by the salaries, right? Whoever working on and I know a lot of people from California because they work from home, they buy properties in Florida right now. Yes, great scenario, but like the California market is supported by the salaries. The money is in California, right? So, and for market to crash in California is very doubtful. But the market in Florida, when you see such a big gap in properties, right? Like on one street, you could see property selling for $450, and then like you just drive 2 streets down and there is a house for 1.5, and they similar square footage. That's kind of insanity right there, right? So I think Florida market, I don't know if I mean, like, maybe I'm wrong, but I feel it's really overvalued, right? And if this like if that supported just the people's people's money migrating to Florida, it's not gonna last long. So but California, we have a big we have a gap to grow. So in US, I mean, like, that shows a little bit what happens. Like, most overvalued city actually is Boise, Idaho. It's a perfect city, right? It's a beautiful city. Oh my God, but it's grew immensely for the last couple of years. And again, San Francisco, that I would show that San Francisco is undervalued city in the Bay Area. And you basically can see it, right? Like when you can buy, I don't know, single family in San Francisco for 2.5, let's say 2.5 would buy you a bigger home, like in San Jose maybe, but still San Francisco for city itself, I think it's much undervalued, right? So there is like much room to grow, but I would say, like right now in San Francisco, I see the same tendency, right? People a little bit conservative in the city as well, but there is still room to grow. And a little bit, yeah, you could see the graph in here, what areas are overvalued and undervalued, and you can see specifically in California as well. If you have questions particular about specific city, just reach out to me and I will tell you what's happening in the city at the moment. So basically, each city in California, they have their own climate, like financial and economical real estate climate. So we would, like, I can't speak, like right now, let's say San Jose is much hotter market than San Francisco, right? And so each city is specific and we have to talk specifically about the city. And yes, the news, which probably everyone heard, that Google requests everyone to come back to offices, and people, and Apple as well, and nobody wants to go back, and everyone signs petitions, they want to stay home. So I don't know how it's going to affect people's salaries, and maybe it's going to be a little pullback closer to Bay Area. Yes, and if you have any questions, let me know. And this is my favorite graph, which explains actually why we're in this market. So everyone asks me like, oh, the market is going to crash like in 2008. If you look at this graph, right, it shows like many years of the market. And what you see, we always go up, right? Whatever happens, we always go up. And 2008, it was a very specific time. It wasn't the market as of now, right? The 2008, prior to that, maybe Sani can tell us more, but yes, all the people who got these loans and who got like multiple properties, it was easier to get the loans. Right now, it's not so easy to get a loan, and people, like, mortgage and mortgage lenders and lenders, they basically check everything, your income to debt ratio, and it's a very extensive check at this point. So basically, whatever happened in 2008, it's not going to happen now, right? So it's not. I would just want to say that people do have a lot of money, and they do have money right now. And we, as we know, since inflation started with these couple years, money was printing like constantly, right? Like the economy have lots of money. And yes, a lot of buyers have funds, they have like savings, they have backbone to go in. And I know like that's the problem too, like as I said previously, I do have a lot of buyers who can save up, like because some of them paying for daycare, some of them, like basically you have one child and all your money goes for daycare. This is it. You can save up for down payment, but you basically can buy potentially, but you can't because you don't have money for down payment. And that's why I actually invited Sunny, because that's a program which I want to learn about myself, right? And educate my buyers. And it's interesting to hear about it, Sunny. If you can help us and teach us a little bit more about it, it would be awesome.
Great. Good morning. Thank you, everybody. My name is Sunny Aguilera. I'm with Finance of America Mortgage. My office is based in Stockton, but I work the entire Northern California region, actually California region, and 25 other states as well. I've been in the mortgage business since 1994. Yeah, I know it's a long time. And have been an approved CalHFA lender for the last 7 years, I think now. So CalHFA is a wonderful program. We've helped hundreds of people, thousands of people probably at this point, get into a home using this particular program. And this new program that CalHFA has devised is pretty phenomenal. It's called the Forgivable Equity Builder Loan. So in short, what it does is it offers you 10%, a full 10%, to go towards your down payment and your closing cost, or a combination of down payment only, or a combination of down payment, PMI buyout, and closing costs. Okay. This loan can be used with additional funds. So if a buyer has 10% of their own funds and want to use this to do another additional 10%, they could do that and meet their 20% down payment requirement and not have to pay PMI. So we are doing a number of combinations with this equity builder program to try to get people to maximize their buying power. Okay. Some of the requirements are you must have a 640 credit score. Okay. By definition, you must be a first-time home buyer, which means you cannot have a primary residence in the last 3 years. Okay. Rental properties are okay. If a person's on title with their parents, for example, and we can prove that they lived in a home for 3 years, that's not with their parents, then that is okay as well. So there are those one-offs where even if you are on title on another property, you can still purchase using this program. Okay. The main kicker with this is the AMI. Okay. So the area median income, there's a tool on the website and on the page that we're showing here where you can click on and you can type in a property address or a location, and it'll tell you the 80% area median income for that area. In most Bay Area locales, that amount is $106,880, with the exception of Santa Clara. Santa Clara is $118,000 and change. Okay. But you cannot exceed that loan amount. I mean, that income amount, I'm sorry, per year for the borrowers. Now, what we are doing is we're getting, say we get a couple, the husband makes 105 and the wife makes 75. So we're having the husband apply for the equity builder, and then the husband and wife qualify for the CalHFA program, because the regular traditional CalHFA program will allow you to go up to a $248,000 per year income level. So the good news is that if your clients cannot qualify for the equity builder because they make too much money, or they just won't get enough home, they can still qualify for the regular CalHFA. Okay. So now back to the equity builder piece. So, this is, again, you must be a first-time home buyer. You must, in order to get this forgiven, you must live in the property for 5 years and cannot refinance or sell or change titleship. You cannot remove a borrower. You cannot add anybody for 5 years either. Okay. And if you've completed this task in 5 years, then the amount that you have borrowed that CalHFA has given you, that 10%, will be forgiven. So what happens is that when you close on the transaction, you'll have 2 deeds of trust. One will be for your first mortgage, which you'll be paying on every month. And the second will be for the forgivable piece. Okay. And if your 5 years is up and you've met all the terms, then they will do a reconveyance, and that will come off of your title, and you will have clear titleship of just one loan, and you can do with your house whatever you want, sell it, refinance, whatever the case may be. And that money that they gave you is now yours. Now, with that being said, every year you are going to get a 1098 form, which is like an income form for 20% of the equity builder that you're borrowing. So for example, if you borrow $50,000 for the equity builder, every year you're going to get a 1098 tax form for $10,000. Okay, so please be advised of that as well. But the program again is great. You know, we close plenty of CalHFA loans, and us being a direct lender, the close time is pretty fast. I mean, 30 days or less is fine. You do not have to take the home buyer course prior to getting approved for this loan. So that is a big misconception of people. They think they have to spend the $100 and take the first time home buyer course before they can start looking. And that's not true. We can apply, we can have you apply now, we can approve you now. And then once you're in contract, that's when we recommend that you take the course, because then at that point, you know that you have a reason to spend that money. Okay. So all the underwriting terms and guidelines are just like standard terms. This is a 30-year fixed rate mortgage. There are no adjustable rate mortgages with this. Okay. And the loan to value cannot exceed 105%. So what that means is that you can't do 3% for down payment and 7% for closing. Okay, the maximum you can do is 5% for down payment and 5% for closing. That will give you a cumulative loan to value of 105%. Now, again, with the equity builder, we are able to manipulate it in different ways to where you can get more bang for your buck as a borrower. So whether it's, you know, doing a 5% down loan, you know, buying out the PMI and then using the rest for closing, that'll help you qualify for more home. So that's one way we're doing it. Or again, some people have 10 or 20% down and they just want this extra 10% down so that way they can qualify for more home as well. Okay, so there are property restrictions. There's mobile homes are not eligible. Only manufactured homes that sit on land are eligible, and tenants in common are not eligible either. But single family residences, of course, are eligible. Townhomes have no restrictions, and condos, only if there's pending litigations, are not eligible. But you know, most condos are going to be allowed on this program as well. So there is a lot of opportunity for buyers to get help, especially if they don't have a down payment, or use this program in conjunction with the down payment they have to help them afford more home. So that's pretty much the program in a nutshell. But I'm definitely open for questions. You know, I do this all the time, and we talk to we've gotten a ton of inquiries since this program came out. But you know, we do pretty much know it like the back of our hand, and we've done a lot of these loans for people. So we understand the guidelines. We know how CalHFA works. So I'm very adept to using this program, and very looking forward to helping as many people as possible. Thank you.
Yeah, thank you so much, Sunny. So do you have any questions? Any questions coming in? This is a good chance.
Please.
Okay, I do have a question.
Yeah.
So is this like I know that's a special fund from government, right? Like, is this this program is going to be going on and on, or it's just when it's going to run out of funds?
When they run out of funds, which who knows how long that's going to be. There's millions of dollars assigned to this. I think it was like $66 million assigned for this in particular. But I can tell you that CalHFA has been around for over 40 years. Mm-hmm. They've never shut down, not even during COVID. So if the performance level on this program works, then I anticipate this to be an ongoing program. Mm-hmm. One thing we are hoping for too is that we are hoping for the income limits to adjust here by the end of the month, or at least get some notification. But as you can see, as you're going on your site, you know, the amounts vary. Like Tracy's under $60,000. So we all know that nobody can buy, if you make less than $60,000, unless you have a huge down payment, you can't buy anything in Tracy for that. But the point is that we are hoping that by the end of May, we'll get some notification on the area median income limits increasing, which will be able to help more people qualify for this program. Talked to a number of people, probably a dozen people that are like $5,000 to $10,000 right over the income limit. So we have them on our calendar to call at the end of the month, and there's probably more to see if the income limits do increase, then hopefully we'll be able to help more people get into this program, because it is a great program. You know, the rates are the best rates that CalHFA offer. So, which is good because, you know, again, you're getting the betterment of the best interest rate they offer. The PMI factors are reduced as well. So because it's considered what they call a lower income type, a lower income type program, they do also offer reduced monthly PMI. So that as well helps the borrowers, because instead of say costing, you know, $190 a month for PMI, you're only going to pay say $90 a month, which will help you again be able to afford a little more home.
I mean, yeah, PMI $90. I think it's pretty. It's not.
To answer David, yes, the previous page say, so whoever is on the loan must live in the home for the duration for it to be forgiven. Now, what can happen is this. Let's give you an example, okay? So say, for example, David, you buy the home and you stay in it for 2 years, but because of a job relocation, for example, you have to move to Texas, okay? So what will happen is that you've already been in the property for 2 years. So if you borrowed $50,000, after 2 years, you'll have to pay back 30 of it, okay? So they do tier it. They give you a fifth for every year. So, you know, if you do sell within the 5-year period, it is a tiered type of payback that you have to pay. So you don't have to pay back the entire $50,000, okay? Say you've been in there for 4 years. Then at that point, you pay back only $10,000 of the assistance that they've given you. Did that help? So if you're qualifying with the family member,
You can.
cover, I'm the only one living in it. So yes, all parties must occupy the property. Technically, all people who are on the loan must occupy the property.
Can I ask you, so as I understand, just to clarify, so basically let's say a couple, right? Like a husband makes 105 and wife makes 75,000, right? Let's say, and then the husband qualifies, but he's the only one who is gonna apply for the loan, right?
Correct.
So, and they
Now
still,
he's the only one that'll qualify for the equity builder, but we can also approve them both for the regular CalHFA loan, okay?
Oh, I see.
Yes. So they do have more options, even if, and that's what we're telling everybody. I mean, everybody that is inquiring about this program with us, we're telling them, look, even if you make too much money for the equity builder program, that doesn't mean you can't get help. So let's see where you're at, and then we'll tell you what your options are. So when people apply, we're giving them all their options, whether it's the equity builder with the husband only, or the regular CalHFA with, you know, the husband and the wife. So whatever the case may be, we want to exasperate every option we can to give home buyers more options so they have better ammunition when they go to buy their home.
Can I ask you really fast? Like, so if the person makes like, okay, 105K, so basically what's the price range they're looking at by the program?
Well, it honestly depends on how much they have to put towards the home. I mean, 500K condo is pretty average right now with using just a program only. But you know, I've sent approvals out with, you know, at 700 or 750, but those people are putting down an extra $100,000 or $150,000. So, you know, ideally, if you have very little debt and a really good credit score, then you've got a good shot of getting into something. Okay. And I'll be honest with you, it is going to be more challenging with this program to get into a single family home in, you know, pretty much the Bay Area, unless you're buying in maybe like San Pablo, Richmond, Contra Costa County, like some of those areas. You know, you can still get a decent home for, well, you can still get a home for 500,000 or 600,000 or 650, you know. So Those areas, you still have potential to get a single family residence, but in most cases, it's probably going to be a townhome or a condominium. Now, again, we're hoping that the income limits will go up, because if they do, then obviously we'll be able to help more people, and maybe they will be able to find a single family residence that can work for them.
That would be great.
Yeah, I know.
Yeah, what about in Sacramento?
I mean, Sacramento, the limits are lower. I think it's in the 60s. I haven't really looked at the Sacramento limit because we've been so focused on
72.
Yeah, we've been so focused on the Bay Area because, again, I'm the only loan officer for CalHFA that is approved in all 6 Bay Area counties. So really all we're getting is inquiries about, the Bay Area itself. So, but I know like Solano, I think is like 78. San Joaquin is 59 and change for the income limit. Stanislaus is 57 and change for the income limit. So
interesting.
72 in Sacramento, yeah.
What's the biggest request from your side in Solano?
Well, just that all the documentation be complete. Because of the overwhelming response to this, it's so hard to kind of go back and forth with people, in terms of needing more documentation. We really just, if you upload all your documents or send them to us, and I can go through the application and make my assessments and have everything there that I need to do, it makes it just so much easier, because I can give you breakdowns, I can send you estimates, I can give you your approval letter, and then you can start shopping. And again, because of the response, we're really trying to work as an efficient manner as possible. But, when we have to go back and forth with people, it kind of slows the machine down a little bit. So my honest assessment of this is to do the application. When you do the application, please fill out all the information as accurate as possible. Also, please make sure to put all the assets that you can possibly use to purchase a home in the application as well. So that way we know what we have to work with. Again, some people don't have more than $10,000, and that's fine. That will still work on this program. And some people have $200,000. So we just kind of need to know, where those numbers are, so we know how to direct your approval and set you up the right way.
Oh, this is great. Actually, that's a great program for first-time home buyers. And yeah, if you have any questions, please ask. This is you can contact directly Sunny. And if you have any questions for a particular city in the area, just text me as well. Any questions? That's pretty much it.
Okay. All right. Well, I do appreciate you having me on this call. Again, please reach out to me directly if you have any questions regarding the program. Me or my team will respond accordingly. And if you do apply, we will try to get back to you as soon as possible. Again, the responses have been very overwhelming, so we are trying to work through them as we receive them. But email is the best form of communication right now, simply because of the responses that we've gotten and the inquiries we've gotten about the program.
The last question, sorry, Sunny, the last question.
Oh, yeah, that's fine.
David is asking, I probably missed this, but an interest rate's higher for this loan?
So like today's rate is 5.25% for the home equity builder. So, I mean, it's about what the average rate is of what you had on your slide there. So the rate's actually pretty fair.
Which is not bad. Any other questions? Yeah, this is it. Thank you so much. Thank you, Sonia, for presentation. And it's.
Oh, you're welcome. Thank you, everybody, for having me. And we look forward to helping anybody who wants to use the program.
Okay, thank you.
All right, thank you.
Bye-bye.